Good morning and welcome. Patriot Radio News Hour. Joe and Jason live on this Thursday. I hope it finds you well. The madness has started. Yes, the official, the playing games that now today starts the official NCAA tournament. They call it March Madness. We've called it the year of chaos, and let me tell you, it has not disappointed. We had the Fed yesterday. I'll be honest, I have no idea what these guys are thinking. Here's what I do know. Inflation, forget about it. I think maybe Goldman Sachs was right. We're never going to see 2% inflation. I shouldn't say never. That's not true. It's going to be a very, very, very long time, a extremely dovish Jay Powell yesterday. We'll break it all down for you. Record high gold price, the fifth record in March alone. Stocks at record highs. The bubble, right? Just keep pumping it. Pump, right? That's where we're at. We are in bubblicious territory. Our toll-free number, 800-951-0592. The website at allamericangold.com. And the Fed comes out yesterday, because we got to talk about it. They said, hey, we're still planning on 3 rate cuts this year. Yep. But don't worry, they didn't want you to think that they totally abandoned us. They pared back slightly some rate cuts in the next couple of years. We'll tell you all about it. Really had to do with Jay Powell and his comments. Quantitative tightening, the easing of it, coming soon. So get ready for that as well. We had jobless claims today, right? The craziest thing, jobless claims. All the layoffs. We had Joanne's, the other day saying we're filing for bankruptcy. Darden Restaurants, Olive Garden. The first decline in sales since COVID. Just a crack, but guess what? Nobody's being laid off. Just ask them. 210,000, kind of right where it's been, right? Just doesn't move, right? Every week, you know what? Just say 210, and you're probably going to be in the ballpark as far as jobless claims go. Existing home sales, they exploded higher. Now, I know what you're thinking. You got to remember, this was a February number. For a little bit, remember, the 10-year note got down to like 4%. And there was a pickup in buying. I'm going to say this. I think this number gets revised lower because they kind of just take like the first couple of weeks of February. But still, here's the important part. What about prices? I mean, Janet Yellen's already told us. Oh, no, don't worry. Inflation's going to be okay because the cost of housing's going to go down. It just is. Rents are the rent fairy's going to come and just say, you know what? Tell you what, guys, you can pay less. The house fairy's going to come. Everything's going to get less expensive. Nope. The highest priced for an existing home in the month of February ever. And prices, Jason, were up another 5.7%. But somehow the feds are saying that financial conditions are tight. It's hurting the economy, and we need to start some rate cuts pretty soon.
When those rates came down a bit, like you were saying, Joe, it sure just has the feeling of let's test the waters. If we lower a quarter point, how much home buying can we get going just with a little tiny nothing quarter point later in the year? And without having to lower it, the markets did their thing off of the rumor, right? And it went pretty well, right, Joe? So I guess the quarter point is in their pocket for whenever they seem to need it, before or after the election, which I get the feeling it might just be at 1 quarter point before the election, just to keep everything fluffy and working good for the time being.
Well, it's interesting because the markets are under the impression they're going to lower rates in June. That's where we're at today after yesterday's big announcement. I don't see it. I
Nope.
don't. I mean, I want to see it, I guess. I mean, but how? How? I don't know. But in looking at the projections, right now we're between 5.25 and 5.5. Their little dot plot, right? You know, it's so funny. Hey, everybody, just put a little dot on where you think things are. Still signals 3 rate cuts, with the first one beginning in June. Okay. Well, then, listen, there better be a lot more Joanne's and a lot more Darden restaurants, right? Jobless claims. Better be something more than 210,000. But nonetheless, the big thing that we knew was going to happen was, what about the tapering? When are they going to start reducing quantitative tightening? The answer, soon, fairly soon, from Jay Powell. He did say, ready, here's his big words on inflation. Well, it's still too high. Still too high. Okay, then why aren't we raising rates? Right? I mean, hello? Right? If it's too high, we haven't raised rates. And, you know, people forget we haven't raised rates since last summer. Right? But, hey, who am I? Listen, this is great news for gold and silver. It is good news. Listen, look at stocks are at all-time highs, right? The Magnificent Six now, because Tesla's been kicked out of the group. They're loving it. But he did do his favorite as well. We're still highly data dependent. So Jason nails it again. Yes, we're still looking at the data. I don't know what data, but they're looking at some data. 800-951-0592. Joe and Jason, Patriot Radio News Hour, and the bubble keeps getting bigger. A quick look at the markets. It's a record. The Dow was up 400 points yesterday, up 300 points today. We're right in earshot of Dow 40,000. 39,837. The S&P's up 30. Record 5250. The Nasdaq's up 116,000 in change. Right now, gold's up 15, but gold's been up a lot higher than that today. Right now, it's at 2176. Been as high as 2225. And I'm telling you right now, I love the action today. So when we're looking at that gold market, we'll talk about that in a minute. Why do I love the action when you're like, wait a minute, you know, hey, gold's off almost $50 from the high from when we were sleeping. I'll tell you about that in a minute. The 10-year note barely higher at 428. Mostly because the red hot housing number, and then crude oil off a little bit, but still well into the 80s on crude oil. Be careful here, guys. Be careful here. This is gonna be, as we said, the year of chaos. What comes after the chaos is what you're preparing for now. You got to prepare now. Being diversified. The bubble is just you know what? Here's the best part, especially for us older folks out there. We've seen enough boom and bust now that we kind of get it. You know, the first, 87, okay, but then like the tech bubble. Man, I was full on into it. I'm like, oh my God, the NASDAQ's going to be worth more than the Dow. Of course, all they do is take the good NASDAQ stocks and make them part of the Dow. So that was obviously idiotic thinking on my part. Of course, then it blew up, and you're like, oh, I didn't like that. Then the financial crisis, really didn't like that. Get prepared here. Be diversified. You better have a lot of gold and silver. And you know what? I highly recommend, for those of you that have $50,000 or more, getting part of your wealth that isn't tied to Wall Street, Maybe it's an IRA that you have. Maybe it's extra money sitting in your bank account. Check out YRefi, up to 10.25% fixed rate of return. What does fixed rate of return mean? I mean, it doesn't change. But what if this happens? What if that happens? What if, what if? Doesn't matter what if. It's 10.25, period. Doesn't care. And when this thing cracks, when the bubble cracks here, I'm going to tell you right now, it's not going to be like the other bubbles. Because what did we do? We printed. Print. Look at where we're at now. We're printing like crazy. We're running $2.5, $3 trillion budget deficits to get this bubble illusion. Now they're talking about, oh my gosh, we got to really soon here. We got to slow down quantitative tightening. What does that mean? That means, right, that, hey, we've got problems here. They know they've got a problem. You know they've got a problem. Check them out. And it's something really that you feel good about. But invest, YRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them. That's the easiest thing to do. Just call them 888-YRefi-24. But, Jason, I think even the markets were blown away by the dovishness of Jay Powell. In one breath saying inflation's too high, but we're still sticking to our 3 rate cuts. And by the way, we're still highly data dependent. That's the, instead of the dog wagging the tail, that's the tail wagging the dog right there. That's the Fed saying we can't see into the future. All as we can do, Jason, all as they can do, well, we're just looking at this data. And, of course, unfortunately, we've massaged this data so much over the last 50 years. They essentially, let's get rid of all the common sense. Let's get rid of that. Because, come on, man. Why do we want common sense? Why do we want to actually track what it's worth? And I always talk about the inflation rate being the rate for a homeless person. Right? Well, let's not count food. Let's not count energy. Let's not let's not count shelter. Right? Let's not count any of that stuff. And then tell us how we're doing, right? It's nonsense. Right? This is what happens when you have a bunch of people that all they've ever done is read books, get together and try to convince everybody that they know what they're talking about. It's a very, very dangerous place to be. But if you want to talk about, okay, did they have any worry? Well, in 2025, so by the way, we're at 5.25 to 5.5. The dot plot still says 4.6. So that's almost, right? 4 rate cuts, almost, right? So that's 3 for sure rate cuts in 2024. 2025, though, Jason, they got a little tougher. They're now saying 3.9 in 2025. So I'm just like, well, wait a minute. That's another, 3 rate cuts next year. And that was less dovish. Apparently they were thinking there'd be even more. By 2026, see, don't you love these guys? I mean, they're so good. It'll be down to 3.1%. So another 70 basis cuts next year and 80 basis cuts the year after. I mean, I can't even imagine a more delusional picture that was painted by the central bank yesterday. I think, I'll tell you right now, Wall Street can't believe it. I really, really think as I'm looking here, they're like, oh my gosh, this is great. These guys just want to try to keep pumping up the bubble.
Yeah, inflation always also makes it really hard to understand the actual value of these things, Joe. The mentality of the average American is when inflation makes the prices go up, and it's been 2% or some low amount of inflation, normal inflation for years and years and years, and you see that the price of, I don't know, whatever it is you like to buy, say you're a coffee guy, and you buy a can of coffee, and it was $2 for the can, now it's $2.15 for the can, then it's $2.50 for the can, and what you're seeing is like, oh man, it's costing a lot more to get coffee, I need to make more money to chase that coffee. What you need to do is have a whole bunch of coffee and sell it to somebody else, and then the people will be chasing you, and you'll exchange it. I mean, that's why being a business owner is helpful when it comes to financial concerns. But that's why you buy gold and silver. You don't want to chase dollars. They get people chasing dollars, and so the housing prices really haven't gone down. I mean, in some areas, 5% or whatnot. There's some modest gains in housing prices in certain places, but if you're looking at the Dow, which is up not a whole lot, but it's up. It's up. It finally went from 3 years of Biden administration, 32,000 down, and now it's 39. So it's moving now. Oh, okay, there's some modest gains. Well, gold's been moving too. We were in the 1,800, 1,900 range. Now we're talking 2,200. And so your house price is just sitting there. Your house is losing value. The number on Zillow says the same. But if gold is up and even the stock market's up and other things are going up, your house is actually crashing in value with keeping the same number. And this is the kind of things you need to understand when you buy gold, that you're holding value and other things can hold value. And dollars, the big loser right now, everything's gaining. What's the big loser? Dollars. Dollars are big losers. They're always going to be the big loser. And they get you, the average American, chasing them. And it's a foolish endeavor, Joe.
Well, I'm going to say this. I don't get it, but I don't need to get it. I've said this from day one. Jay Powell is Arthur Burns, right? Joe Biden is Jimmy Carter. And, of course, now you have Janet Yellen to help them all out. It really is somewhere. This is the path. This makes sense to me. Right, because I guess what's better? What's better? Crashing the economy or just setting it up to where the middle class becomes this new class? Right, the poor. They want to hold on to the middle class, but now the middle class now really is, right, lower middle class. And now we're going to have a new class. I'll call it the upper poor class. Right? The upper poor class is, I don't own a home. I make good money. Right? The upper poor class, I make good money. Right? I make 70, 80. Maybe my wife and I, we make 100, 120,000. But we rent. Right? We rent our home or our apartment. We lease cars, or we buy, our cars are 10 years old, 15 years old, and I don't get government assistance. That's going to be kind of the new way. And I think this is exactly what the central bank is kind of saying, which is, hey, listen, it's going to get so expensive that the vast majority of people, even though you're working, making good money, you're just going to get by, but you're going to have no extra, and you're not going to be able to own anything. You're probably going to carry a credit card balance. A lot of these people will be what I'll call tax refund dependent to try to pay off a credit card bill or something to that effect, and it's going to be an interesting situation to see how many people end up on the dole of the government. It's insanity when we sit here and think about an unemployment rate of 3.9%. Nobody allegedly is filing for unemployment if you look at the data they're saying, and yet we've got over 40-plus million people on food stamps. And Jason, I think we're watching this number grow as more and more people ask the food banks. They'll tell you. Hey, listen, we're busy and getting busier out there as people just don't have enough.
No, Joe, and that's what we've been talking about. We've had a lot of our smaller customers selling gold and silver over the last year when things were slower, and the gold price was kind of staying the same, and the inflation was still hot, which has been hot for a while. And we have gold customers selling, which is good. I'm glad they have it, so that they can sell it and they can cover whatever shortfalls they have in their own finances. But how many times have we talked about less customers to this restaurant and less customers going to this thing? And what was it yesterday? I think we actually talked about, on the Half Empty Cup of Joe, we talked about cereal for dinner because people can't afford to just have a steak or chicken parmesan or even a hamburger helper for dinner. Cereal is just so much cheaper. Well, these are things that are telling you people are not making it. And we talk about lower standard of living, Joe. What more indication do you need for lower standard of living than, let's just count cereal for dinner 2 times a week. It just saves us money, right?
Well, the PMI surveys came out today, both manufacturing and services. Ready? A steepening rise in cost was the big thing here. Hey, whatever. Let's go for it. It's bubble time, baby. Patriot Radio News Hour. We'll be back after the break. 800-951-0592. Joe and Jason, Patriot Radio News Hour on this Thursday. We're talking about the move today in gold. So gold right now is up 12 now, 21.73. It's been as high as 22 and a quarter. And I'm telling you, I really like it. So while we were talking during the last segment, gold went down to 21.68. Yesterday, gold closes right before, and I'll say New York gold closes right before Jay Powell speaks. Or I'm sorry, right before the Fed announcement it gets made. So it closed at 21.60. When I got to the office this morning at about 5 o'clock, gold was around 22.10. $2,210. Last night, while we were asleep, gold hit $2,225. Well, what that's called, so when the New York market reopened this morning, closed at 21.60, opened at 2,200 and change, and that's called a gap. That's a gap in the chart. And, all of the trading, I shouldn't say all of it, the majority of trading is all done by computers. And they've set it up now where gaps aren't good. They don't like a gap's got to be closed. So I like the action today. I even said to Jason, I go, you know what, when we were talking this morning, we need gold to close this gap. I need to see gold get into the 2160s. It doesn't have to necessarily get all the way to 21. It was actually, I want to say it was 2160 2161. I think was the actual close number. But it needed to get close to that to say, okay, we've covered the gap to allow gold to keep rallying here. It's done that now. So we got to 2168. And this is the April contract that we're talking about. So Jake said, I know it kind of sounds weird, but that's something you absolutely wanted to see happen is close that gap. That way, gold going to continue to make, higher highs. Look at the low that gold held over the last, say week or so as interest rates went back up. Held 2150 3 different times. So we've got a new higher low. Today, we've got a new higher high. And we've essentially closed the gap that was left from the move between when the Fed made its announcements and the New York exchange reopened.
And then I also mentioned to you that you got to watch gold sitting in the 2100 range for 2 weeks now, which is a better position than in 2020 and 2021 and 2022. All 3 of those years, gold went into the 2000 territory, and it just didn't really hold that position. It loved 1900, 1800. And then it was late 2023, it went into 2000 territory and held that through the beginning of 2024 this year. Well, the last 2 weeks, it just bullied into 2021, trying to push 2022, and it's not going back to 2000 range. So it's like the 2000 range never even existed. And that is a clear indication of 2200 gold, 2300 gold, 2400 gold. It really looks to me like it's really going to start pushing some really high highs. And if the indication of everything else going up and the inflation is there as a guide, then yeah, you may want to get into gold very quickly if you want to catch this level we're at, which is creeping up very quickly.
Yeah, and that's a great point. We made that announcement of how gold finally is comfortable now above $2,000 to the ounce, and it's just with today's move now, the next target's 2,300. And my guess is that's how it'll go. It'll go in $100 increments as gold keeps pushing forward. And based on what the Fed had said yesterday, whether it's warranted or not, I don't know. It really is hard to see, gold not going considerably higher from here. 2,300, 2,400, 2,500. My guess is, maybe every $500, gold will have to, when it hits 2,500, maybe it'll have to do it a couple of times before it, gets ready to run towards $3,000 to the ounce. But it's something where the amount of central bank buying, I'm just going to tell you right now that the traders are saying that they're kind of getting used to now these central bank buys, and these central banks, they're buying these contracts for delivery. They're buying the August contract, the October contract, the December contract. They're seeing them buy gold contracts in 2025 for delivery, which Jason, I think, is really putting the big floor on all of this, because it used to be, okay, well, gold's going to run, and then the buying would slow down. Today, the traders are saying not only is it not slowing down, they're seeing central banks buy even more contracts for delivery in the future.
Right. They've been buying, the central banks have been buying gold for a while now. And that makes a lot of sense, Joe, because when you're buying it and you're expecting something to happen, eventually that's going to pay off for you. And now it's going up, and that always kind of gives you that urgency, right, Joe? It's like, well, we've been putting this much in, but now look at it moving. Do we want a bigger position? And then, the knuckleheads in the room is like, yeah, well, if we wanted to get a bigger position, but it's going up, it's just going to cost us more later. Buy more. Buy more. I mean, that's the pressures of supply and demand of the actual physical gold, because central banks are taking possession, Joe. They're not just buying paper gold. They're storing it in vaults somewhere. That's different than the paper spot gold that we have to watch all the time.
Yeah, I mean, today, the December gold contract crusted $2,300 to the ounce today. So it's something where all the things are kind of lining up here. And again, the Federal Reserve once again really doesn't see the path forward. They're just talking about data dependency. They're giving lip service. Yeah, okay, inflation's too high. It's too high. But we're not. But we're going to cut rates. I mean, that's kind of kind of a weird thing. We're gonna slow quantitative tightening, and we're going to cut rates because inflation's too high. But we're monitoring the data. Okay, great. I think that tells us everything we need to know, and I think this is why you saw the banks out there saying, "Listen, it's maybe time to start talking about ending the 2% inflation target and making it the 3.5% inflation target." 800-951-0592, Patriot Radio News Hour, Joe and Jason. Yesterday, we ran $10 Liberties because it's the cheapest price per ounce. Right? You get 2 half-ounce coins for less than a 1-ounce coin. I love it. That is still the case today. Of course, it's just going to cost you more. I mean, right now, the regular price on a $10 Liberty, $1,210. We're going to run them on special again today, 1 through 19 at $11.95, 20 or more, $11.85, 50 or more, $11.80. So essentially, it's $20 more expensive today. And Jason, unfortunately, the way this is going to be playing out and how the rest of 2023 looks like the path that we're on. Don't be surprised if we're talking about, hey, paying $13, $14, $100 for a $10 Liberty before 2024 is even over with.
When I joined Patriot in 2018, when the gold prices were a little softer during that course of that year, I'd go on the air, Joe. We go on the air for $1,250 for a $20 Liberty. And now you're saying before the special, we're looking at $1,210 for a $10 Liberty, half the gold. That is, and if you think, well, that's like 6 years, that's doubled in 6 years, I don't know I don't think very many other things have doubled in 6 years, Joe. There's not a lot of doubling of assets in 6 years. In fact, a lot of things have shown a lot of volatility in 6 years. Gold has done a nice job of just trailing upwards at a nice rate. Sometimes it pops, sometimes it pops. I think we're looking in I think as the years go by, we're going to look at this time frame as a time where it popped. But you may want to buy it before it pops. You want to buy it before more bad news comes across, because I'll say this, Joe, either things are really going to run bad and things are really going to get bleak and the inflation and the cost of everything's really going to keep pushing the rest of this year, which I think that's what's going to happen. I think a Joe Biden presidency is what the Fed and central bankers want. It's more of a socialist style of government. And it's just interesting how for the first 3+ years of Biden, it's all been this lagging, dragging economy that's just sideways action. And then suddenly on the election year, here it is. It's all great, because what is Biden going to say? He's going to say, look at the Dow, look at the stock market, look at the prices of everything are so good. The economy is doing so well. That's how they're going to try to sell him to win the presidency. I don't know which guy they actually want, Joe, but it seems to me that they're going to build up the prices of these things and just tell the American people, look, everything is up. Inflation's going to be under control. We're doing it. And then after the election, what's going to happen? Crash and burn. And I think gold and silver goes up during this run-up, and then I think gold goes up during the crash. And good luck timing the sale of your other assets, as the inflation will be here permanently, very possibly permanently higher. And then you'll lose all your money in those other assets, and gold just keeps on moving. And that's what's going to happen, Joe. Can you believe it? $10 Liberties as much as a 20 in a few years. Yeah, in just 6 years, and I think it may do it again in 6 more years, right? That's the 2 pattern, years. Right? Boy, I hope that's 2 not years. Right. But it very well could be. Think about what we've got now. So the Fed's saying very soon we're going to start the easing of quantitative tightening. Right? That means gold's going higher. It's simple. Gold's going higher. So my guess is 6 weeks from now, when their next meeting is, we're going to get that announcement. And by the way, they've already said they really want to get rid of all the mortgage-backed stuff. They want to get that off their balance sheet and just have treasuries. Then they've stuck to not only 3 rate cuts this year. They're talking about 3 more rate cuts next year, and then after that, a couple of more. Right? So already they're signaling to all of us,
hey, gold's going to go higher in 2024. Gold's going to go higher in 2025. Gold's going to go higher in 2026. Right? This is kind of the stuff that Jason's talking about. And this is what they laid out again at yesterday's meeting. If anything, yesterday's meeting was even more dovish than I thought. I really thought that they would be like, well, maybe we're only going to do 2 rate cuts this year. Because, look at it. No, we still want to do 3. And guess what? Quantitative tightening, yeah, we're slowing that thing down, and we're going to slow it down sometime between now and the next meeting. And again, I don't think gold's going to stay at 2,100 very long. It may be, and that's what happens with gold. It does those things where it stays in a spot for a long time, and then boom, next thing you know, it doesn't stay at $2,100 very long. I don't think it's going to stay at $2,200 very long. It's going to have to get quite a bit higher, I think, before gold's going to even have to work that hard to get to new highs. I really just see this laying out, and again, kind of like we talked about. So gold's back up $15 here, 21.76. We don't know. I don't know where it's going to go, but I wouldn't be surprised one bit to see gold closing at new all-time record highs today.
Joe, I think the whole thing is contrived. It's rigged. If you want me to guess when the next rate decline is going to be, when's the next meeting after June? Is that July or August? That's when they'll go down a quarter point, right before that election. That's when they're going to go down a quarter point, no matter what's going on.
It does.
No matter what goes on, that's boost those prices one more time.
Yeah, right? The hell with inflation. Patriot Radio News Hour, final segment when we return. 800-951-0592, Patriot Radio News Hour on this Thursday, $10 liberties. And I get it, right? A lot of people, it's at all-time highs. I want to be able to go back. I want to go back and buy it at, 1975. It's not going to happen. It's not going to happen. It's something where, based on what the Fed said yesterday, this is a great entry point into the gold and silver markets. It looks like we're just setting ourselves up for a sustained period of inflation. Just higher prices, endless money printing. The government, we've seen these budgets that they're proposing to try to avoid the government shutdown. They have no intentions of reining in spending of any kind. And you're just seeing not just the gold market, you're seeing the world react to all of this. And like I said, they pretend, the dollar is strong against the yen. Please. Right? That's just another worthless piece of paper. $10 liberties, 1 through 19, $11.95. 20 or more, $11.85. 50 or more, $11.80. And as Jason pointed out, right, in 6 years, the gold price has doubled. And I'll be honest with you, I don't know that it's going to take 6 more years for it to do it again. It just doesn't look that way because the last bubble, right, gold went from 700 to 1900, right? 18 something, right, for that one day. But that was the big power move. Could we see as early as next year where we're talking about a gold price, forget about, hey, 2,200. Could we be talking about a gold price, could we be talking about a $4,000 gold price? And I think the answer is, unfortunately, absolutely we can be, Jason. That would just make sense because of this boom and bust cycle that they put us on. Think about the first bust, the dot-com bust. Gold was like $250. Right? It went to 500. It doubled on that bust. It went up 200% on the next bust. What if it goes up 300% on this bust?
Yeah, I mean, gold in 2018 had a low of 1156, but it had a high opening day of 1310. That was the range. It was in that range for the entire year of 2018. 2 years later, gold had a high day in the 2000s. It just popped, and it just. And yeah, it sort of went sideways for a little while, but that's because the inflation hadn't really. Gold went up before the inflation, a leading indicator, and then it's been sort of in this like sideways higher inflation for a while. So gold's trailing up a little bit, and now, Joe, where's it going to go now? Because the inflation's not stopping. So 2,200 gold, I think, is very likely, maybe well before April. 2,300 gold could be in April. It's very likely. I think. I'm not going to say for sure that's what I'm calling, but I don't see anything but prices going up for everything around you, Joe.
800-951-0592. Jason and I, we're coming right back with the half-empty cup, and we're going to have Flat Earth Dave going to be on the show with us today, so tune in for that. We'll be right back with more.